Good morning and welcome to the ARC protocol. We're breaking from our usual format this morning to focus on a single critical data point that's sending tremors through the digital asset space. The Federal Reserve's iron grip is tightening, and the old guard is heading for the exits. Our primary focus is a significant rotation of capital out of risk assets, with crypto feeling the most acute pressure. Data hitting the terminals indicates that some of the earliest and most steadfast crypto holders, the so-called OGs, are now selling their positions. This isn't just market noise or a minor correction. It appears to be a calculated retreat, and the catalyst is clear: the Fed's relentlessly hawkish stance on interest rates. Let's break that down. With the central bank signaling that rates will remain higher for longer to combat inflation, the entire risk curve is being repriced in real time. The core question for institutional and veteran investors is simple: why hold volatile, speculative assets when you can lock in a guaranteed high-yield return from safe haven government bonds? This capital flight to safety is the textbook definition of a risk-off environment. The fact that long-term holders are now capitulating is a powerful signal, suggesting they believe these macroeconomic headwinds are simply too strong to fight in the short term. This leads directly to our market analysis. The selling pressure isn't happening in a vacuum. It's a direct consequence of monetary policy. The era of cheap capital that fueled the last bull run is definitively over, and the market is being forced to find a new equilibrium based on fundamentals, not just narrative. We are seeing a new level of maturity where digital assets are no longer insulated from Wall Street's macroeconomic realities. Because of the gravity of this single story, we are foregoing our usual blitz round to keep our focus here. The key takeaway is that the Federal Reserve's policy remains the single most dominant driver for all markets, from equities to crypto. The outlook is therefore cautious. Until we see a definitive pivot from the central bank, a clear signal that rate cuts are on the horizon, expect continued volatility and pressure on all risk assets. The market is in a holding pattern, waiting for its next signal from the Fed. Stay vigilant. That's your critical update from the ARC protocol. We'll be back with more as this story develops.